I'm Grace Joseph, and you're onto the Gracia Memoir session. Trading last week was more challenging than usual due to the high volatility in the crypto market. It seemed the market had lost its sense of direction days before 2022. The bulls were trying to get an upper hand, so were the bears. The battle of these market participants came with a cost since my longs and shorts went underwater. This meant more losses than gains. Despite this setback, I made the most of the opportunity by trying something new if it will give me an edge in my trades. But first, I had to understand how these market makers were pushing prices swiftly in one direction and then to the next direction within a matter of minutes. On closer inspection, everything was evident in charts. I'm Grace Joseph, and this is the Gracia Memoir session. Now let's dig a little deeper. I began each trading session by mapping out support and resistance levels on the intraday charts. I then tried to ascertain what had caused a major part of my losses. The culprit was trading against the short-term trend. I'd sometimes taken reversal trades in a swing high or swing low on a higher time frame and paid dearly for it. Here's what I'm getting at. The high volatility meant some corrective moves didn't play out or reach their target. On that note, I made the decision to only take continuation trades since the market reacted more violently on impulse move. This involved mapping out channels on the 1 hour time frame and minor channels on the 15 minutes time frame. If price showed signals of making a bearish impulse move on the 1 hour time frame, only shorts were taken on the 15 minutes time frame and opportunities to go long ignored. On the other hand, entries were only made on corrective moves once there was a confirmation that the trend was changing. What this did was to significantly cut my losses and help me focus on the most rewarding trades. It's worth noting that this strategy was paper traded for 2 days on TradingView before being implemented on Binance. My trading strategy was taken to the next level with the help of Bollinger Bands and stochastics. Here's what it looks like. Bollinger upper and lower bands pointed to the next price direction, which gave me clues that we'll soon have a short-term uptrend, downtrend, or range. And with these hints, I was able to better position myself. Crossovers below the middle band and specifically the 20 SMA of the indicator presented an opportunity to go short. Stochastics, on the other hand, was used to spot overbought and oversold regions and to confirm signals gotten from Bollinger Bands. In this case, a move above the 80 level on stochastics indicated I short, while a move below the 20 level hinted a good buying opportunity. Candlesticks like spinning tops and dodges also proved useful in my analysis. For instance, a spinning top pattern after a tall green candle hinted I exit my position or raise my stop loss. Discipline also became my watchword since I had to wait for price to reach my entry target before taking a position. What's more, I ensured stop loss levels are as close as possible to my entry price in a bid to reduce my losses significantly. The high volatility of the market also required that I protect my open profitable trades with a stop loss adjustment in order not to thwart my efforts. The best thing about these stop losses is that they ensured I do not overthink my trades before making an entry. The mere fact that I could get out with a minor loss if my analysis was wrong gave me more confidence in trading in a volatile market like this one. Now go out there and try out these strategies and see how well they work out for you this new year. Who knows when you will need them, given that Bitcoin meandered its way to the neckline of our head and shoulders pattern on the daily chart. But more about that next week on the Gracia Memoir session. This is Joseph, and you're onto the Gracia Memo session.